Do you do CP in the stock market? If you do CP, listen carefully. The money that is going to grow with your SIP, and if you had been doing CP for the past 10 years, how much would it have grown? I have all this data today. Look here. Abay di sati tantate. Dati I have done a backtest myself. Here we are going to show you data from 2015 to 2025. Get al papti past 10 to see if you had been doing SAPI for the past 10 years, and if you were investing 1 lakh rupees on the first of every month, how much money you would have made, and you will be surprised to know. This money could have grown a bit more and would have grown more in the past 10 years. If you had followed the strategy I follow myself, which I call drop trades, this is my strategy, and here is the normal SIP. So one is your normal SIP that you are doing, which you have been hearing about, and the other is our modified SIP. So what did we do in the modified SIP? In the beginning, the money seemed less, and then how it became more. I am going to show you everything. So look here. This is a simple SIP strategy where we invest 1 lakh rupees in Nifty on the first day of the month. Right now, I am only talking about Nifty data and the SIP done in Nifty, because so far I have explained ETF, SIP to you. So this is not an SIP in mutual funds. This is an SIP in ETFs, and our strategy is also in ETFs. So, you're definitely going to get better results than mutual funds, but you're going to learn a lot that you might not know yet. So look here at what we did. We invested 1 lakh rupees every month in SCP for 10 years. How much total amount did we invest? Look here, 1 crore 26 lakh, 1, 2, 3, 4, 5, 5 zeros, 1 crore 26 lakh rupees you invested, totally okay. After that, how many units of ETF do you have? 98,604 Nifty BIS units you have received. So here you can see these units. These many units you keep getting. Every time you are investing, and after that, the value of your portfolio has become, in 10 years, you had invested 1 crore 26 lakh and it has reached 2 crore 74 lakh. Your portfolio size has reached. Your unrealized panel, if you haven't realized it yet, would be running. 1 crore 48 lakh means you would have a profit of 1 crore 48 lakh. So if you look at it return wise, your portfolio would be up by 117%. And if you talk about CAGR returns, it is only 7.7%, meaning 7.7. These people make videos on the internet talking about 12%, 15%. Saying that Nifty is giving a 15% return, Nifty is giving a 12% return. So this 7% return over 10 years. In fact, I will show you this. It's not that there's any magic in my strategy. My strategy is at 9.81%. Now you will say CAGR return 9.81. So are those who say 12 or 15 lying? They are not lying. You actually have to understand. There are two types of differences. Let me show you what the difference is. Go to Google. First, type CAGR versus XERR. So CAGR means compounded annual growth returns, which we calculate on lump sum investment. So what is this compound annual growth rate coming to? This is what you get. If you invested 1 crore rupees in a lump sum at once, what would you look at? What is my CAGR? What is my CAGR? But if you are investing money every month, then you calculate the extended internal rate of return, which we call XRR. Now, how is it calculated? I will show you. So go to Google. Simply type XIRR calculator. Open whichever calculator appears in front of you, and then what you will have to do. First, you will have to enter the date. When it ended. Oh, our data is from the year 2015, from one date, and we are talking about one date. We have taken this data up to the year 2025. Now, how much money were we investing yearly or monthly? Now, we were investing monthly, 1 lakh rupees, we entered 1 lakh. So, where did our final portfolio value reach? 2 crore 74 lakh. So, I write here, adding 1 lakh rupees per month, 2 crore 74 lakh, 1, 2, 3, 4, 5. Now, you see, your XRR returns are coming to 16%. So, you need to understand that when you do SIP, you invest money gradually. So, the rate of return you want to calculate should be XIRR instead of CAGR. it remains. And it is coming at 16%, meaning Nifty has given you XIRR returns at the rate of 16%. Your portfolio size has grown accordingly. But if you similarly look here, I am showing you one thing, which is my strategy that is a little different. In that, we are not investing 1 lakh rupees at once. Now see, sometimes we are investing 19,000, sometimes 4,000, and the money we are investing, notice here, the dates are different. It means now the month is the same. In the first month, on the 6th, the 1st, and the 30th, 3 investments were made. So here in the second month, 1, 2, 3, 4, 5, only 5 investments were made. And how much were they? 4,000, 10,000, 5,000, 13,000. So, what are they doing? Investing 1 lakh rupees in one place at a time. And what's happening here? This is not clear. Sometimes 19,000 rupees are being invested, sometimes 15,000, sometimes 9,000. What's happening? I'm going to explain the entire mathematics to you. Alright, pay attention carefully. Here, look at the invested amount, 12,900,000. And here it was 12,600,000. It means there is almost only a difference of 2 to 300,000. There is a difference of 300,000 in the invested amount. But how much is the difference in returns? Here, you are getting 27,400,000. In my strategy, it is becoming 3 crore 46 lakh. What is here around 2 crore 70 lakh? Around 3 crore 45 lakh. Isn't this a bit too big of a difference? Can such a big difference occur? Because here you are getting a return of 166%. Your annualized PNL here is 2 crore 16 lakh, and here it is 1 crore 48 lakh. So this is a very big difference. If we look at it, there is almost a difference of 66 lakh here. So why is there a difference of 66 lakh? And here the CAGR is coming at 9.81%. What difference does this create? I will show you. So here, the XIRR returns we were looking at, which were from a normal SCP, were coming at 16%. Now see how much it will be with my strategy. So if the portfolio size reaches 34,600,000, so I write here 346, and your return becomes 20%. So this is insane. Now, because we have completed the back test, we can share the strategy with you. So first, you need to understand that if you are doing a normal SIP in mutual funds, then within mutual funds, you are incurring a higher expense ratio. There is also an exit load that is not calculated here. Okay, the second thing is that right now, we are only talking about ETFs, so both are ETFs. Let's understand what strategy has come up in ETFs now on the board. So, when we are talking about ETF investing, you invest in ETFs, do a SAP in mutual funds. So when people do a SAP, they don't understand where they are doing SAP.
You are doing SAP in the equity market. Now, the equity market, which is our stock market, is risky. What does risky mean?
What is risky? So we are afraid. If there is risk, there is love. Dialogues sound very nice. But risk means that if you start investing money today, it is not certain that you will definitely get returns. When you do SIP in mutual funds, that disclaimer comes, right?
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
This means if the market corrects, you might see negative returns. And if you need money, you will have to sell your assets cheaply, which could result in a loss because the equity market is risky. I want to take a little less risk. And for this, what I did is I will do SCP, I will invest money. But not entirely in the equity market, meaning not all the money in the equity market. I will also invest money in debt. Now, what is debt? Debt simply means investing money for interest. Now, how do we give money for interest? Understand the point. There are many debt instruments. When I talk about ETFs, I mention ETFs. For example, you invest money in gilt funds. Now you will find 5-year gilts and also long-term ones. These are government securities. Generally, their returns are around 6%. But in the past year, they have given 12%. So the returns have been very good in the past year. But generally, they are not this high. You kept getting a 0.5% return per month. So what are we doing now in my strategy? In my mind, I am thinking that we are doing a systematic investment plan of 1 lakh rupees. But what is my rule for it? Understand the rule. What did you all do directly? Took 1 lakh rupees and directly invested it in the equity market.
What did I do? I made a rule for myself.
If the market falls by 1%, first of all, I will invest money only when the market falls. I will not invest money when the market rises. When the market falls by 1%, if Nifty goes 1% negative, then I will buy 20 of Nifty worth 8,000 rupees. Okay. I will buy Nifty 20 for about 8,000. Now, if you ask about 0.5%, then how much will you buy? You see, 4,000. If the market falls by 0.5%, I will only buy Nifty 20 worth 4,000 rupees. If the market falls by 2%, I will invest 16,000 rupees. Now you might say, how often will the market fall that much in a month? 2 times, 3 times, 4 times, 5 times. You will only invest 5 times in the whole month. You are right. I will only invest 5 times because I only want to invest 5 times. I want to buy only when the market falls. So you might say the market doesn't just keep falling like that. The market goes up, then it falls. The market goes up, then it falls. The market goes up, then it falls. So my investment is happening down here, down here, down here. I know that too. But my investment is happening even when it is going up. But the CP persons is also going up. How does he know it's only going down? I invest when it falls. I am investing money, but the money that I save, suppose I had to invest 100,000 rupees for the whole month. I only invested 50,000. So at the end of the month, I check how much balance I have left. Now, 50,000 rupees are left. I invest the entire 50,000 in 6% instruments where I get a fixed return. So now it's clear that 6% will come. The money I invested in this will yield 6%. It's government security. So the risk is almost negligible. There's no risk. So when the market is falling in risky places, I am investing money. And until I get a big opportunity, I put my money in the guild. There will be a time when the market will fall significantly. When the market falls significantly, I'll tell you what my rule is. I will tell the editor here, they will show it on the screen. To simplify a bit, we have followed an indicator, which is the super trend. So I will apply the super trend on the Nifty chart. And I will apply it first on a weekly basis. And then I will apply it on a monthly basis. So, the editor will first show you that when we apply the monthly super trend, no settings need to be changed. Keep the default setting of 10 days and you will see a line that when the market is moving, the super trend shows green from below. It's a green colored line, and when it's red, there is a red colored line above anyway. As long as the market shows that you need to follow the green trend, we will keep our investment low. How much has it become? This means 8,000 according to 1%. This was based on a person with 100,000 rupees. If you say you can afford a 10,000 rupees monthly SIP, then you should reduce it to 8,000, which means 800 rupees, because see how much you want to invest monthly. Now invest only 800. That's what I would say. You think, I can invest 2 lakh rupees a month, then make it 16,000. You can change it according to your preference. I have done my back test, so you can change it as you like. What is after this? I saw that the top, it creates Nifty. The super trend that occurs, the line of this super trend, the editor will show you, it is approximately 7 to 8% away. Okay? So, in the backtest, exactly, this is our rule number 1. As soon as Nifty falls more than 8% below its all-time high, ATH, we will increase the quantity. Now, if it goes down 8%, it means it has broken the super trend weekly. As soon as the weekly super trend is broken, we will increase our investment by 2.5 times. That means if I was investing 8,000 before, now what will I do? I will invest 20,000. So if Nifty falls by 1%, we will invest 20,000, and based on that, I will invest on a daily basis. Only if the market falls, not if it rises. So we made a rule, but when it breaks its monthly trend, we have seen that generally when we look at the monthly trend, there is a fall of 20% from the top, a fall of 20%, and if the market is going below that, then there is an opportunity. Because if you look at history, whenever the market has gone below the monthly level, it has created a very good opportunity. We don't know the market's bottom, how much it will fall, so we will explain there. What will I do now? That in the money I invested in guilt, I invested in debt, I will sell that and invest in equity. But when will I do it? When the market falls. Until the market falls. Right now I am investing small amounts. It's going slowly. Look, I'll tell you a reality. You must have heard of Warren Buffett's business partner, Charlie Munger. But do you know when Warren Buffett started, he had another business partner? But no one knows about him. Do you know why? Because he was getting rich quickly. He wanted to earn money quickly, but he was out. He used leverage and suffered the loss. So Warren Buffett says you should stay away from three things. Number one, ladies, meaning extra lady, Hindi and life. Second, leverage. You should take as little leverage as possible. And number three is to stay away from liquor. Here, Warren Buffett and Charlie Munger say that we knew from the start that we were going to become rich. We knew from the start that we were going to become rich. So when we are inevitably going to become rich, what's the hurry? But one man was in a hurry and he went out of the market. That's why Warren Buffett says the stock market is an instrument to take money from impatient people and give money to the patient. I don't want to get rich quickly, but I know that I want to make a lot of money in life. So I am ready to go slowly with the stock market. Now, when the market breaks the monthly trend, I will increase my investment tenfold. 10 times meaning where I was previously investing 8,000 rupees, now with a 1% drop in the market, I will invest 80,000 rupees. Okay? Now you might ask where this 80,000 will come from, because if the market falls more, it might be an investment of 3 to 4 lakh in that month. So the money I was saving earlier was for this time. It's not that the money wasn't giving me returns, but that money was invested here. Now let me tell you something amazing about the metrics you just saw. It doesn't even include the return on debt. Earlier you saw a 20% return. As long as my money was free, when I wasn't investing, that money was giving me interest. Okay? So that return is extra return, and that's a bonus for you. Okay? If you feel like it, this system is good. If you think, no, it would be better this way, we will do that. Do it. I am telling you the truth. Today I am 30 years old. A time will come. I will also be 80 years old. So these 50 years, right? I am going to follow the same system. I am going to do this. And I know this system is going to make me very rich. Slowly, no problem. But this is inevitable. Brother, the plane didn't crash. Something is certain. We will make a lot of money. And this is the same system. I will teach it to my children. Now, this is just the investing system. After this, we also have a triple compounding system for which we conduct webinars. There will be a form in the description or comments. Please fill it out. Then you might get a chance to meet me every Sunday. I conduct free webinars where you can come and talk to me and ask questions. Okay, please fill up that form. So, what are we doing within this system?
We gradually invest money. Gradually.
So, now if you understand it this way, what are we doing? The market is going up, no investment. The market is going down, make the right investment. The market falls further, then invest. The market falls further, then invest again. The market rises, no investment. The market rises more. Invest, the market falls again.
Yes, it is like this. Then the market went up, no investment. Then the market crashed. Investment, a big crash in the market, big investment. Then the market, no investment. The market fell, investing more and more.
Whenever it is going down, my investment is happening here. So what is happening to us because of this?
This is called dollar cost averaging or rupee cost averaging. So we are also doing rupee cost averaging.
This is, according to me, the system I have been following so far. This is one of the finest systems that in 4 years I have fully fledged. Now in the market, there are many. So within 4 years, with my best understanding, the system I was able to develop is this. And some people can't do it even in 40 years. I mean, we live it in the market from morning till night, right? We live the market in the evening. You see communities all the time. Crypto trading is also happening, but in the upcoming video with you, I am going to fully reveal everything in the system or NLD. You will enjoy it. I know there are restrictions in the Indian market, but within crypto, the system will shake you up. You are going to enjoy a lot in the upcoming video. If you are interested in crypto trading, there are free webinars for that too. You will find the link to the Google form. Please fill that out for crypto as well. And if you want to trade in crypto,
Oh, so you can go to Delta Exchange and open your account for free. Now you can trade in crypto options there. There is a daily expiry. So if you want to trade in crypto options, and I'll tell you in an amazing way, you get more leverage here. But you should remember Warren Buffett's advice. There is leverage up to 200 times. It means you can trade 2 lakh with 1,000 rupees. But what did Warren Buffett say? If you want to get rich quickly, you will be out of the market. And even in the crypto market, those wanting to get rich quickly are getting out. But don't worry, I will share my system with you. I will show you exactly. I almost started trading in crypto after January. From January until now, what results came, what mistakes happened, we will share everything. And one thing that no one shows, I will show you. What fees were incurred and how we reduced the fees, how the setups are currently running, how positional trading is happening. This is on Delta Exchange, whatever my panel is. We are super excited. We will share everything with you. But first, learning is important. So I don't want to influence you guys. I don't want to influence you for anything. I just want to educate. There are many influencers. I want to become an educator to show you the right direction. To tell you that I made mistakes, I didn't ask anyone. No one taught me crypto trading. Whatever Pooja knows, she knows options trading. Very few people work in options in crypto, and I am telling you the truth right now. The profitable systems are being made only in options. I will share with you in the future.
I will show you. What was the fee being charged?
It's a commotion. Okay, so super excited. For now, the ETF system we told you about is to buy on dips. And if you still say you can't buy every day, I'll give you a better system. Look, I'll give you a rule. It's very simple. And first of all, this rule is for those people who look at it this way. If you're working a job, then what you should do is, suppose you want to invest 20,000 rupees every month. The market is generally open for 20 days. You should invest 1,000 rupees daily. Now, when to invest 1,000 rupees? When the market falls. If the market is going up, let's say for 1 to 3 days, meaning 1 to 3 days, the market continuously went up, you saved 3,000 rupees, so a total of 4,000 rupees. The day the market falls next, invest there.
So this is for a job, and if you are doing some kind of business where you know you can take out a little more money from your business, then you can follow this rule when the market falls by 1%. 8,000 rupees is very good.
Though it was for me, I also want a back testing of this system. Like if you are investing even 1,000 rupees in this way and putting money together, then write it in the comments. In the upcoming videos, I will show you the complete back testing of this system as well. I have shown you this one. So let's go to the screen.
So now you understand that the SIP we are doing in ETFs, we are not doing it all at once. They are doing it in parts. Probably they are not investing a large amount at once. We're not investing gradually. But now many of you might say that if we don't have time, we can't check every day. So you can continue with the normal SIP. There is no problem. Keep investing every month, and that's how returns are coming. But if you want to, just set an alarm on your phone for 3 o'clock, 3:15. You have to look at the market once and make the investment. If you do this over time, a difference of millions and billions of rupees is being created. If you want to do it, if you feel like, no, brother, I absolutely don't want to look. Whatever is being cut will be cut. So you can do SIP in mutual funds or in ETFs. It doesn't matter to me. What matters to me is that if someone wants to earn more money, they should know the way. Today, I have shown you the way. That is what matters to me. Now, if you have a lump sum amount in between, only then I would say, to do not rush to jump into the market, because if the market falls by 10% or 20% from here, imagine you were investing 10 million. You will directly see a loss of 2 million. A new person cannot see that loss in their account. So what you do is keep your money safely in debt instruments and gradually withdraw money from debt. When the market is falling, keep investing money. Secondly, one thing was if the money runs out, you earn every month. If you are earning regularly, you can invest regularly. If you ever feel that you will have limited income, then you can stop the SIP anytime if you want. You can pause and then start again. It's all in your hands. It's your money, your decisions. Look, if you want to invest in the stock market, you will find a link in the description and pinned comment for free Demat account opening through which you can do SIP in ETFs. You can buy ETFs. In fact, now you can also do this with mutual funds, buy stocks and trade. Everyone needs a Demat account. There is a link in the description pin corner to open a free Demat account. The second thing is our free webinars are triple K. You all know what comes on the 1st of April? April Fools, but April Fools. Donald Trump did not make it on the 1st of April. He made it on the 2nd of April and said that we will call it US Liberation Day.
This is one of the most important days, in my opinion, in American history. It's our declaration of economic independence. My fellow Americans, this is Liberation Day. April 2nd, 2025 will forever be remembered as the day.
Well, on the 2nd of April, they gave a timeline of 90 days that I will impose reciprocal tariffs up to 40%. The countries that impose tariffs on us. Pre-Judicially said the calculation was quite strange. We also made a video on how Mr. Trump used his genius mind while announcing the tariff. The 90 days time given was this: brother, either accept our conditions or we are going to impose this tariff on you. Now, when do the 90 days end for India? They end for India today on the 8th of July. It means the decision should come by tomorrow. Either India has yielded to us, accepted the US conditions, or it has given some proposal to the US brother. This is what we will do, this we will not do. But something has to come forward. But the tariff that the US was to impose on India will not be acceptable to India at all. So, just something or the other is bound to be in favor of the US. But you all know that there are talks on the internet that this timeline has been extended beyond 90 days. Trump is a completely deceitful person. He said, now there is time until the 1st of August. Is there time for India too? The answer is no. There is no time for India because the 1st of August deadline has been extended only for those countries to which Mr. Trump himself wrote a letter in his beautiful handwriting. Meaning, it means that only the countries that received the letter from the US have been given a timeline until the 1st of August. Has India received any letter? The answer is no. As far as I know, or on the internet or in the news, I haven't seen anything like that. So the deadline for India is not the 1st of April. Then what is the deadline? The deadline is today. It means something might happen by tomorrow. And if something does happen by tomorrow, it will affect the stock market. It could have a significant impact. What kind of impact will it have? Will it be positive or negative? Now, to discuss all this, we have a semi-registered investment advisor connected with us, the one and only Mr. Vinay Prakash Tiwari. Mr. Tiwari, welcome to our Go Self-Made show.
Greetings to you and to all the viewers as well. Greetings, welcome. So it's a very interesting thing. It's a very interesting discussion. Now the discussion is such that if nothing happens by the 9th, if nothing happens by the 8th, then on the 9th, it seems like a nuclear bomb is going to explode in India.
Now the thing is, what will happen to the stock market? This is the biggest question for Indian traders. But at the same time, there is another very important question.
Whether the 26% tariff imposed on India will have a greater impact on India or on America. Who will be affected more negatively? Their trade war with China went up to 200%. Many things were discussed there. Currently, not from the US Embassy, but a statement has come from US government officials that there are 176 countries. It is not so easy to make deals with 176 countries in 90 days. So it is not so easy that it will happen all of a sudden. First, we need to understand the concept of reciprocal tariffs.
The US is a developed country. India is a developing country.
So if a developing country is imposing higher tariffs, imposing a lot of tariffs or imposing tariffs on a developed country in return, the simple concept or statement is that you are developed. You have already developed. We are developing. So you will have to help us. When we sell our goods to you, you should take less tax. But when you sell to us, we are entitled to take a little more tax. And every developing country can say this, especially a country like India, where there is a population of 1.5 billion, the largest population in the world. It can certainly say this, and if America wants to sell its goods, it will have to bend a little here because the consumption is also of 1.5 billion people. It is of 1 billion people. Now the question is whether America will bend in front of 1.5 billion people or not. And what effect will this particular tariff have on India? What effect will it have on the market? This is also a question. Now let's first understand the logic behind why America wants this reciprocal tariff. Make America great again, Mr. Trump, and I speak directly about Mr. Trump. This is a capitalist government. It is only concerned with making money. Since Trump came, you must have seen that there have been at least 15 such instances, at least 15 times counting, where Trump gave a statement and 2 days later retracted it. And when the statement was given, it caused the market to fall. And when they reversed, the market went back up. This matter also went to the US court. There too, Mr. Trump lost the case and he said that no, you will have to adjust the tariff. So he said the last date is the 9th of July. By then, we will settle down again. In such a case, one of their videos also went viral in which he said, you made money, didn't you? You made money, didn't you? I mean, they are openly saying that, yes, in all these cases, when the market falls, we put money into the market. And when the market rises, we take the money out. There are multiple such cases. The most recent one happened. They had a fight with Elon Musk. He said, Lane, I want to sell my Tesla for $69. $69 is too much. $69 is too much. I want to sell Tesla for $69. So that's the story. Don't be worried, but the next day, 2 days later, both are apologizing to each other. So first the whole market falls, then the whole market rises. So the story is that when the market falls, put money in, and when it rises, take it out when your money is at its peak. So this story is continuously going on. Now, what is happening in the deal between India and the US?
About 3 or 4 days ago,
In my opinion, about 4 or 5 days ago, there was a tweet from Trump that India and the US are almost finalizing a 0% tariff trade deal, a 0% tariff trade deal. Now, what does a 0% tariff trade deal mean? It means that they will not impose taxes on each other. He gave such a statement and it is very close. But don't know what's in it? Now, what's coming out behind the scenes is that the deal between India and America that's about to come, this deal will be a mini deal. Actually, though, ask me, this won't be a mega deal because take a mega deal. They are going to make a deal of $500 billion, but they are going to do it about 6 months from now. You know, that $500 billion deal will make it a mega deal and they will make it very vast and do all its advertisement and everything in both their countries. But for that, they need to make this main deal. Now, America and India, what does America want from India? What does India want from America? India wants to sell its goods to America. It is selling. What kind of goods does it want to sell? Mostly jewelry, which is cut jewelry like diamonds, etc. The ones with cuts and designs, that kind of jewelry, India sells there in America. Besides that, steel.
there's even more tariff on steel. The tariff is more than 26%. That's about steel.
Apart from this, may get handmade item from India, like mats and carpets are sent there, like all these things are sent there after being made. Tariffs have been imposed on all of them. They will be imposed.
So now when we look at all these issues and compare with other countries, India's tariff, which is 26%, is the lowest. And its impact will be more on America than on India, because the goods that are reaching America and selling for 100 rupees will now sell for 126 rupees. Because America has imposed a 26% tariff, it will collect that 26% from its own people, not from India. The interesting thing is that 26% again, they will collect it from their own public, the people of America, because they are the ones consuming and buying the goods. So compared to other countries, especially China, Indian goods will be cheaper because the tariff on China is higher. Chinese goods are cheaper, but they will be managed because of the tariffs there. So compared to China, Indian goods will start becoming cheaper. So the first thing that everyone needs to understand is that if I speak in very straightforward language, leaving aside politics and all, if I talk about friendship, then the 26% doesn't make a bit of difference to India. The simple fact is it doesn't matter, because India will remain in the same position it was in before. Its goods will sell just as much. There will be a slight impact, but that impact will be recovered. Alright, so it means India is not in a hurry for this deal at all. If anyone thinks that it should be done by the 8th, then India is not. The urgency for the deal is here. America should have it done, because now it's a question of America's collar. A country like India not giving importance by the 8th is not possible. If India were in a hurry, the deal would have already been done.
Now let's talk about what America wants.
America wants to penetrate. It is already fully penetrated into India's market. America has some tricks for selling its goods. Understand those tricks. What is America's trick for selling goods? America's trick for selling goods is that you can impose tariffs on us, no problem. But the amount you earn from tariffs, use that amount to buy defense items from us. Buy defense material, protect your country. Your war with Pakistan is already ongoing. The fight is happening. China is attacking you separately. It means you have tension with China. So do one thing, buy defense equipment. Now, India... Not buying from America has reduced it. So that's also a very big thing. Now for that America. And another thing, what does America want? America in India's agribusiness wants to penetrate. Now in America, we understand agribusiness who gas near the who taught us to eat wheat. Some America taught us to eat wheat. We did not eat wheat. We ate kharif crops. It was sorghum, millet, corn, and all these coarse grains. We used to eat them. We had not even seen wheat. We had not even seen flour. Before 1970, when there was a drought in India again, the America sent red wheat and hot. And since then, we started eating wheat, we started growing wheat, and now wheat and bread are consumed in almost all states of India. In all the states, America penetrated the Indian market at that time. Wheat came to India and people started eating wheat, people started eating flour, started eating wheat flour, but that penetration did not happen in the same way. Now, how is the Indian farmer for wheat seeds? The Indian farmer is a resourceful farmer. So what does he do for wheat seeds? For wheat seeds, he plants the crop and saves some part of it for the next time to use as seeds. Alright, what does America want? America wants India to buy hybrid seeds from them. Now, what does hybrid seed mean? Hybrid seed means lab-grown seed. Now, if lab-grown seeds penetrate India once, then the Indian farmer who manages with low costs and is already facing demands to increase MSP and double their income, if they start buying expensive seeds, the situation will worsen. Another thing is the population of 1.5 billion. They will stop getting cheap food. The third, another big thing is that countries are buying wheat or flour from India on the premise that farming in India is done by hand. Chemicals are still not being used there. There are no chemical seeds. This is why those countries buy. They will automatically stop. And America has done this before as well. Do you know with whom? America has done this before with African countries.
And African countries were ruined because of this.
So where is the problem arising? But the problem is that America wants to penetrate here and India will not give in to America on this matter, even if India has to reduce its tariffs. So it might seem that the opposition will say that India has surrendered, done this, done that. Whatever it is, even if India has to reduce its tariffs, our double tariffs will be imposed there. But India will never under any condition allow America to penetrate the Indian agribusiness. Now, how will India persuade America? India will persuade America like this. Brother, do one thing. Okay? Reduce the 26% tariff, bring it down to 13, 14, 12 or 10%. Now assume this is 10%. If you bring it down to 13 or 12, then a 14% margin remains. Consider that 14% is India's earnings in a way. Suppose a total deal of $1 billion happened and we saved 14%, meaning we saved approximately $14 million in $1 billion. We will buy weapons worth $14 million from you.
The matter is settled in billions. But the big problem is that this will become a little bit like 140 million. Instead of 14, it becomes 1,000 million billion. So this calculation of billion is very different. Anyway, we understood the concept. We understood the concept that we bought a 14% difference.
Now, even in such a case, if you look, how is the Indian market? How has the Indian market become in such a case? The Indian market is thriving. Why? It's thriving because you got the tariff reduced, you won. Even if you couldn't get the tariff reduced, even if you got stuck at 26, you didn't make a deal to buy weapons or America offered you something.
He has to make the offer to reduce it by that much, make that much of a difference. The final deal is the same. So even in such a case, and if let's say nothing happens and it remains at 26%, then the market has already reacted to it.
So now if we talk about the stock market, whether you talk about this movement where the tariff went from 26% to 25% or even 12%, or if it remained at 26, now it's not going to increase from 26, even if it stays at 26. In every case, the market is going to be bullish. In every case. The investor here is ready. No matter which case you bring, we are happy. Now we will have to look at this on the data as well. How does this appear in the data? So for the data, I will show you using the LTP calculator on the option chain to see what preparations people have. By people, I mean those who are invested in the option chain or those who are invested in the stock market. We will try to see what their preparations are. Alright, first of all, I have shared my screen. So we are using the LTP calculator. We will try to see. So here I have the Nifty expiry for the 10th of July. I have opened the options for that expiry.
Alright, you have been seeing for the past 2 days. The market is completely flat and stagnant.
Absolutely.
Not doing that either, just waiting like when...
For the past 2 days, in the last 15 to 20 minutes of the second day, the market has been a little bullish. It has been a little bullish. Now here, I will do all strike prices and first we look at this. So when you look carefully, look at the call side. So when you look carefully at the call side, the largest open interest is at the strike price of 20 times 1,000.
Right.
And this is completing 26. I mean, like, okay, there is the largest open interest, but it could also be that against 1,60,000 open interest, there is 1,50,000 as well. There is nothing like that. Look here, 68%. That is 1,14,000, which is sitting at the ATM at 25,500. That means there is no competitor matching 1,67,000. Okay, look at the put side. That is what is the pressure on the put side. So on the put side, 10 kita soda sebagai Thomas apa bond bet. Daik ustaid, the largest open interest is sitting at 25,400 and there is no open interest below it that could potentially challenge it. At 25,000, it is 72%, which is very low. It is very small in comparison to the open interest sitting at 25,000. So if pressure is applied from the bottom, then pressure is created at 25,400. And this has been the continuous data for the past 3 to 4 days. And if we look towards the top, this PND, there is full preparation to move up to at least 26,000. One thing supports this. The second thing is the weekly range. I calculate on the standard deviation. If we talk about the market in the weekly range, the first resistance in the weekly range is at 25,700 at 690. And our support was at 25,100. The market has come up a lot from the support, right? Now, the second resistance is our L2. Many times when there are such news, the market goes up to L2. When there is no news, it keeps moving between L1 and L1. When there is any big news, generally the market moves between L2 and L2. So even if the market goes up to L2, it is also at 25,983 L2. This also indicates that the market is looking somewhere in the range of 26,000. One thing is done. Let's come to the second and third points. 2 things are done. Let's come to the third point. Instead of the 10th of July, let's move to the 17th of July expiry. So what is the preparation for the next expiry? It is also important for us to see and understand what preparations people have made for the next expiry. So let's talk about the next expiry. On the call side for the next expiry, there is open interest created at 26,000, and I will tell you something even more interesting. As of today's date, that is when it is the 8th of July, one day before today, 26. At the strike price of 26,000, 98% volume has been traded. That means people have been buying and selling here. Many positions have been created here today. The volume created here is almost equal to the volume created at the ATM, but open interest has not been created at the ATM. Where has the open interest been created? It has been created at 26,000. That means a lot of writing and a lot of buying of call options at 26,000. Paying and selling have been done. That means even by the 17th of July, people are looking towards 26,000 in the market somewhere. And if I talk about the weekly range of the previous week, comparatively, the market was bullish this week compared to the previous week's weekly range. So, been to see everything that we see forming in the option chain, what does it indicate? It all points towards 26,000. Now you might ask what's happening on the put side next week. So on the put side, there is an open interest of 21,000 at 25,000. But in contrast, there is an open interest of 15,000 sitting at 25,000, where the highest volume has been created. You won't see the volume here.
It's only 56,000, but good volume has been created at 25,500.
So whether we look at next week's data or this particular week's data, what we are seeing is clearly visible that around 26,000 significant positions will be created. And if we talk theoretically or in terms of a deal, from the deal's perspective, India has always been in a win-win situation. When that news came, the Indian market did not fall much. Why didn't it fall? It wasn't a very impactful news for the Indian market. Basically, it was impactful news for other markets in the world. For the Indian markets, this news has never been bad or troubling.
Indian.
For Falcon Dinani.
India is in a strategically winning position and that could be good for the market. So we are also hoping for the best. Friends, what do you think? Will Nifty go towards 26,000 from here? If you think yes, write yes in the comments. If you think the market might not, then write no in the comments and share whatever your thought process is. Finally, we used the LTP calculator to analyze the option chain data. You can do this, and now you can even do it for free. You will find the link to the LTP calculator. Go to the description and pinned comment to sign up for the LTP calculator. You will also learn, and the option chain data will be very useful to you.
Every day in the evening at 7 o'clock. Those who sign up, like those who sign up today, will have a webinar tomorrow evening at 7 o'clock. That webinar is free of cost.
You all know the magic of SAP. Now, I have told you to do SIP in ETFs instead of mutual funds. But let's assume someone is doing an SAP of 10,000 rupees per month and is investing for 10 years and the market gives a return of 12%. Now you have invested in ETFs. I assume 12%. Also, as in that, even if you did it in a mutual fund, there's no problem. So if you get returns of 12%, your invested amount is 12 lakh rupees with returns over 10 lakh. So your total value becomes over 22 lakh. Sounds good, right? But if I tell you, what if instead of 12, it becomes 24? That would be great for you. But the market cannot give a 24% return. The consistent returns cannot come for 10 years. It's not possible. I never said that the market will give returns. But this return can come. You will say it yourself at the end of this video. So now I changed 12 to 24. As soon as I made it 24, it's mathematics. So 12 lakh rupees were invested. Instead of 10, the return will become 30 lakh and your total value will be over 42 lakh. More than 42 lakh. But if I tell you that if the return here comes to 36%, you would say it's not possible. Warren Buffett's return is 19 to 20%. 36% cannot be achieved. Again, just watch this video till the end. You will believe yourself what system I am talking about. So here, look, 12 lakh rupees were invested and the return is 69 lakh. In 10 years, your total value becomes 81 lakh. From 22 lakh to 81. But this is not magic. I come back to 12%. And according to 12%, the 22 lakh you saw happened in 10 years. If I make it 20 years, so something insane is gonna happen here. If you proceed at 12% and you are doing a 10,000 SIP, so your invested amount, which was 24 lakh, became 91 lakh in 20 years. But if this return doubles, the market will still give 12. But how will we achieve it? That's the system you came to know. If we achieve 24%, it will become 4 crore. From 24 lakh to 4 crore. Wait, if this becomes 36, then it will become 18 crore. 18 crore investing 24 lakh. Impossible. Warren Buffett's return is 19 to 20%. How can we achieve 36%? Sounds impossible. Maybe it sounds impossible to you. But I have named this system the triple compounding system. Just keep watching until the end of the video. You will get all the clarity. After seeing the clarity, I will end this video. So first, let's normally talk about investment. We modified the SIP you were doing and told you that you can do SIP in ETFs. It is better. Or you can invest by yourself. If you haven't watched the video on ETF investing, you can click the link in the I button to watch it. In ETFs, we are saying the market will give 12%, and if the market gives 12%, your portfolio will look green. The editor will blur the profits anyway. But you must be seeing green. So overall, if you look here, you mostly see green inside the ETFs. For now, understand that the market is giving returns. This investment is lying here. But you might be seeing something like pledge here. The editor will show you a little bit. This pledge is visible. What does pledge mean? Pledge means to mortgage. So have I mortgaged my ETFs? Yes, I have mortgaged my ETFs. When I have mortgaged them, what does your broker do? As soon as you pledge them, you will see margin from pledge here. Gesla for less here. The editor might have blurred it, but you can still see an amount here. So the money here, see on one side there is cash. My total cash where it says cash, which I can withdraw. It's coming. So here the withdraw option is appearing, but there is no withdraw option here. Only the pledge option is appearing here. So what is this money for? What can we do with this? Can we use it? The answer is yes, you can use this money for trading and you cannot do anything else with this money. You cannot withdraw this money. It means you have the money, but if you know how to use it, then it is very useful. But if you do not know how to use this money, then it can be a big loss. Let me explain to you. Now suppose you live in a house. If you mortgage that house, if you mortgage the papers, you will get money. But if you take a loan from any bank, you will have to pay interest on the loan, which will come out of your pocket. Here, this money is interest free. This means the money will remain there. You have to use it. If you don't want to use it, don't. You don't have to pay any interest. Don't pay interest.
If money is lying around, then it should be used.
But if we do trading, then trading is a very risky thing. If you do trading and incur a loss, then you will have to pay the money. Then it will be deducted from your cash. And if you incur a big loss, your broker will sell your shares on your behalf. So if I am mortgaging, that's a very wrong thing. One should not mortgage. Well, most people think this way. Like we say, right? That one should not take a loan. We are taught in middle class families, don't take a loan. Absolutely don't take a loan. For liability, like if you want to buy an expensive car, then only buy it if you can afford it. You are taking a loan for a mobile phone, a loan for an AC at home, a loan for a fridge. If you keep taking loans for everything, you will definitely come under pressure. But should you take a loan for business or not? Adani takes it, Ambani takes it, we don't take it because maybe we don't know the way to grow money. What I mean is, if you know trading, take limited risks. How limited is the risk? I say 1% per day. The risk should not be above this. So if you take a 1% loss on your capital per day, it will take at least 100 days to wipe out your entire capital. And you can't be wrong for 100 days. So the point is, if you take a small risk and make a small amount of money, what difference does it make? You use 10 million rupees to earn 10,000 rupees. I say you only earn 10,000 rupees, not even 100,000. So what difference does it make? You use 100,000 rupees and made 1,000 from it. That money was extra, right? If 1,000 rupees is made, then it's extra, right? As soon as that extra money comes in, I want to explain to you that extra money will be added to your account. It will be added to your cash. It means your money will increase. If you know how to make it. And I'm not even saying 1% daily. I'm saying if you make 1% a month, meaning 1,000 rupees from 1 lakh, 1 lakh rupees from 1 crore. Then, if you get a 1% return per month, what is the annual return? 12%, it is a 12% return. So when I was showing you on the CP calculator, you were saying that this person has gone crazy. How is this 12 becoming 24? But when I'm telling you here that your invested money is increasing, forget about that. And as the money keeps growing, the amazing thing is that your margin, the pledge margin, will also increase. Meaning if you have shares worth 10 million and those shares become worth 20 million, then how much money do you get from the pledge? I'm roughly telling you. If there are shares worth 1 crore, any broker will give you 80 lakh rupees. If there are good ETFs, they will give 90%, 90 lakh rupees. They might even give up to 95 lakh rupees. So if its value becomes 2 crore instead of 1 crore, so your pledge margin will automatically increase from 90 lakh to 1 crore 80 lakh rupees. You won't have to do anything. This margin gets updated automatically. Alright, this was an important thing. So what I mean to say is that I have the money. If I know how to increase it, it will be amazing. The third thing is, when you use this in intraday, you don't incur interest. If you use this money for positional trading, then 50% of whatever position you have created, let's assume it shows used margin here. Some are showing. Right now, this might be blurry for you. But suppose here, it shows me 10 lakh rupees. So if I am using a margin of 10 lakh rupees here for overnight, then I should have either 5 lakh in cash or 5 lakh in cash equivalent. So what is cash equivalent? Look, I am explaining in great detail, but whatever I am telling you is very useful. For example, this is liquidity. This is a debt instrument, so it is considered a cash equivalent. Now, how do you know if something is a cash equivalent or not? When you click on plus shares here and click on the list of eligible scripts, scripts will appear in front of you and you will get a list of all the stocks and ETFs here. Which other ETFs are available for pledging and which are cash equivalents? Like what is written here under cash equivalents? In front of a script, it says Paspirpa, it says no and. In front of someone, it says yes. So what is available, what is not, you can see here. Example, I just showed you liquid bees, so we find out about it here. We do Control F and I type liquid bees. So as soon as I entered liquid bees, I searched. Liquid bees appeared in front of me. Is this a cash equivalent? The answer is yes. It is a cash equivalent. Will it be pledged? The answer is yes, it will be pledged. If I am talking about liquid bees here, the haircut on it is 8%. Now understand what a haircut is doing. Suppose you have a share worth 1 lakh rupees. A haircut means that if it is written here as 10%, your broker will give you 90,000 rupees deducting 10,000. If it is a 15% haircut, then you're still stuck, then your broker will deduct 15,000 rupees and give you 85,000. If the haircut is 20%, then they will deduct 20,000 rupees and give you 80,000. This depends on both wallets. The more wallets there are, the more you will go on stocks. Like here, you see a 25% haircut. The more wallets there are, the more haircut your broker deducts here. If we invest and make 1%, trade and make 1% and make 1% in overnight trading, then use your money in 3 ways. If we achieve 3% monthly and 36% annually, how many people will do this video? Suppose 100,000 people watch it, I can write it down for you. Even 1,000 people won't be able to achieve it because it requires discipline. We started working on this system. So if I go to PNL in the current financial year, you might see some green in equity. And if I go into futures and options in the current financial year, you might see some good things. So I can say good things. Below you might see green and red boxes. So what does it mean to say? Something or the other is being made from F and O. You have booked something or the other in equity and something or the other is still unbooked here. Right now, I am just saying something or the other. So we are following the same system, meaning what I am doing myself, what I am eating myself, I am serving you the same plate. The system I am following myself, I am explaining the same system to you and to tell you the truth. It took me 5 years to create this system. It took me 5 years to discover this system. After 5 years, I say today, no matter how much understanding I have, but I am not above my system. This system is based entirely on my problem because I created this system once with full effort. Now, as long as this system generates money, I will continue to follow it. When the system starts giving less money, some things will need to change. We will do that. But otherwise, my system is bigger than me. My system is bigger than my entire knowledge because this system has been created using all the knowledge. So similarly, you all should also create a system for yourselves. I am not saying you should follow this system. The logic of triple compounding is that we can use our money in 3 ways.
Today you found this out. I'm not saying you should start from today.
You have learned something new. Guys, try it, test it, understand it, learn it. I am not telling you in any way to start trading because trading is very risky. You could incur losses. If you can see here, both red and green are visible. So there are losses and profits are made too. There are losses and profits are made too. Let's go. Even if you start, I would say first do paper trading, trade with small capital, take your time. There is no rush. And before starting trading, I told you the first rule. Adi as a state to at least accumulate a capital of 10 lakh. Make an investment of at least 10 lakh, then start. If not today, then tomorrow. But start when you have it. You will meet many people who will tell you to start directly with trading. Money will definitely be made. Yes, money can be made with less capital too. But let me tell you the problem with the Indian market that no one will tell you. You will have less money. You will trade in options. As soon as you go to trade in options, you will trade in out of the money options because the money is less and your probability of losing money is 99%. Maybe there is 1% chance that someone can make money initially by buying OTM options. You won't be able to beat the system. If you want to understand, I am telling you some loopholes of that system first. That loss is inevitable. But today you learned something new about this, and we will discuss it in detail in upcoming videos. So it is clear up to this point. We are on a journey. I am trying to tell you everything, and I told you that ETFs are better than mutual funds. Then I told you the rule of ETF investment. In the next video, I will also tell you the role of profit booking in ETFs. After that, I told you that you can pledge this ETF to trade. Now we will learn trading further. If you want to learn trading for free on this channel, write trading in the comments. I will understand that you want to learn trading. If you want to invest in the stock market, you will need a free demat account. You will find the link for the free demat account in the pinned comment and description. Go and click on it. And from there, you can open your free demat account. With this, you can invest in ETA, you can trade. Along with this, we have webinars on the triple compounding system. The system you're understanding, we have webinars on it. If you want to attend the webinar, it is a live webinar. You can also go and ask me questions. Our trainers will also be there. So if you want to attend the webinar, you will get a Google form link. Please fill it up. Our team will call you to invite you. The webinars are invitation only. Please come and learn. There is no charge. It is free. Okay, there are no charges. Finally, if you want to trade with less capital, see, it is not possible in the Indian market. There is a problem with lot size. If you really want to, you can go to the Delta Exchange India platform and trade in options and futures. Here, if you want to trade in options, you can trade in the money options. And if you want to buy, you can put in as you wish. That I want to trade in 1 lot or 10 lots or 1,000 lots. That's up to you. Meaning if you have less capital, suppose you have $10, then trading can be done with $10. And if you want to do demo trading, then here you will also find the option for demo trading on the Delta Exchange India platform. So you will find the link to Delta Exchange India in the video description and pinned comment, through which you can also trade on the Delta Exchange India platform. For example, you want to trade in Bitcoin. You feel there are big moves here. Here, if you look at the 1 minute time frame, according to the 5 minute time frame, there are very big moves. There is some profit running here right now. I can show you its profit. There are no regulations in crypto yet. We create different strategies, then we test them, forward test them. So it will take me 6 months. Right now, like the triple compounding system is a full flex strategy, a full flex system on the Indian market. But in crypto, maybe after 6 months, I can say that I have a full flex system has been created. Let this thing happen for now. Let it be. Let whatever profit and loss is happening continue. Let it be. So we will talk after 6 months about what we have made in this. Right now we are doing small things, but the win rate is coming out well. I want to keep the win rate at 80%. So if I make a video after 6 months, I can say that the win rate is coming out very well. So that is my focus, and we will share all our knowledge with you for that. Again, you get free education on this channel. Please subscribe, click on the bell icon. And if you want to trade in the Indian market, invest in ETFs, you can open an account for free. You will find the link for the Demat account and the Delta account link in the description and pinned comment. Share this video. We will meet you in the next video. Until then, subscribe to this channel. Click on the bell icon. You self make and Jai Hind. Many of you want to know at what levels we can book profits within ETFs. Well, in this video, I am going to give you my own system. According to this system, we book profits ourselves. Look, this profit booking system, you can either understand and implement it yourself, or you can create your own system. I am just sharing my personal experience here. The experience that has benefited me might benefit you as well. See what we did here. We came to the weekly chart of Nifty. Now on the weekly chart, you can see the market is going up. So whenever you look at this chart, you will see the market only goes up. But in between, like in the year 2008, the market went down. During the COVID time, the market went down. But by what percent did it fall? If you look from the top, in 2008, there was a 64% correction, almost 65. And during COVID, you all know that was around 40% correction. So if someone had accumulated 10 million rupees by the time they got here, then directly here, out of 10 million, a loss of 4 million means a portfolio of 6 million. So here, such a big correction. And in stocks, it was an even bigger correction. So this is just the connection of Nifty. Stocks must have fallen even more. So what should we do? If we keep investing, is there any system that can benefit us? Well, here I have also applied an indicator. Now go to indicators and simply write a super trend here. And as soon as you write super trend, this indicator will appear. I have applied this indicator on the weekly chart. This indicator is telling me here that the price is But when he gave the confirmation to break, here, Afi Pasampati, Afki Papis, and here we offload 50% of our quantity and place that 50% quantity into a debt instrument. Now look, I am going to explain this strategy on the board and you will understand in detail what I mean. Let's go to the board.
So let's understand why we are booking profits in ETFs and how to do it. First, understand the reason for why. Many people are afraid that we are investing. The market is going up, but a big crash comes and all our returns are lost. If there is a system here that can indicate to us in advance so that we can book the profit, and after booking, when the price goes down, we are ready to invest again. We are ready to invest money, but if the market falls, we incur a big loss. All our returns are lost, so you should. If you understand mathematics, pay close attention. You grew your money from zero and here you got a 100% return. Sir, you got a 100% return. This means that if you had invested 1 lakh rupees, a 100% return means your 2 lakh rupees were made. But now, for 2 lakh to return to 1 lakh, it doesn't need to come down by 100%. It only needs to come down by 50%. So a 50% market crash. Keep in mind, it will bring your 2 lakh back to 1 lakh rupees. This means that if a 100% return is showing in your portfolio, just a 50% crash is enough to wipe it out. So even if a 30% crash occurs, it is still a significant crash. This means that your return of 60%, 70% will vanish with a 30% drop. So with the market down 30%, your return will disappear. You will wonder what happened to you, but this is mathematics. So to avoid this, what we are doing is profit booking. Many people will say, I don't care. I will just let it be. No problem. Then just let it be. Then don't look at it at all. That's a very good approach. But for those who want to learn profit booking, the video is for them. Those who say, I am invested for 20 or 25 years and don't want to look at it and don't want to do booking, you are doing very well. We are just doing profit booking for a little extra returns. I do profit booking, so I am telling you my system. Now what I do is, as I told you, you put an indicator, super trend. Whenever your weekly super trend is going positive and is giving at least a 20% return from bottom to top, only then will we do profit booking. If the return is less than 20%, we will not do profit booking. And if a downtrend comes again after that, let the downtrend continue. Then when it goes back to an uptrend, after a 20% return is made, I will book. It means I am ready to wait for the long term. I have no problem with the long term, but even in the long term, I believe that if your weekly super trend has given a return of more than 20%, now I will show you on the screen that the weekly super trend's return is 50%, 60, 70%, so 20% is nothing. But if it has given a return of 20%, then I assume that the market has given decent returns. After this, the market can either go sideways for quite some time or it can go down. So two things can happen. It might go even higher. It might break the trend here and then go up again. That's why I'm only booking 50% profit. I'm only taking out 50% of the quantity. I'm not taking out 100% of the quantity. Keep in mind that because 50% of my quantity is still there, if there is more upside, I'm still making some returns. But when I'm booking profit, it's important. Now, understand that I am not bringing this money home. I am not using it. I am also investing it. Where? In debt instruments. So these days you see ads in the market saying to invest money in hybrid plans within mutual funds. When to invest in equity, when to invest in debt. For me, fund management will do it, so they will charge a commission from me. I don't want to pay a commission. I will do this work myself. So when I need to put money in debt, when my super trend breaks, 50% of the quantity is lying there, and I will take that money and invest it in a fixed income instrument. For example, where will you put your money in debt? You will put it in liquidities. Now, what will liquid give you? Will it give you a return of 4 or 5% a year? I had told you that you can put money in gilts. So what happens in gilts? Your money will be invested in government securities. Yeah, it will give a 6% return per year. Oh man, it will give that. This is a positive return. There is no minus here. This return rarely comes in minus. If you keep money here in the long term, you will make money. Not that the money will go away. You will get money. So if the market falls, then your 50% money, at least that is growing, right? Let the 50% that is going in, go in. But the 50% that is growing, I have kept that money in a debt instrument for that time. But kaisa se, but yes, update. Okay. Now, if the market is falling, I told you the rule of ETFs. What is my rule? I buy by percentage. For example, if the market falls by 1%, I buy for 25,000 or 10,000. My rule is that I keep buying all the ETFs I have with this rule. And if the market falls more, say below the weekly trend, then I buy for 1 lakh rupees, buying one ETF for 1 rupee.
If it fell by 5%, then we bought exchange traded funds worth 500,000. So I averaged down. But I explained one thing to you.
Where will the money come from to buy this? If the market is falling here, then when the market falls, your indicator will indicate. The super trend had already informed. It had already told that the direction of the market has changed. So we exited somewhere here. After that, the market showed a big correction. There is money to invest in this big correction, right? I had invested that money in debt. So what will I do? Suppose I want to buy 1 lakh rupees. Let's assume I have 50 lakh rupees invested and 50 lakh in debt. Now I want to buy 1 lakh and I don't have the money. So I will take out 1 lakh from this debt and put it into equity. Then if I need to invest 5 lakh, I will take out money from here and invest 5 lakh into equity. Now, I will show you on the screen when the market is sideways or super trend. When the weekly break happens, the market will remain in the same place for a whole year. There will be no return or it will fall. So we are getting the opportunity to invest money on time. Within a year, the return that is made and plus the money we invested is being invested gradually. The return that is being generated within our date is still being generated. But we are averaging equities at lower levels.
So, see what happened? The market was very big. I was invested. The market fell. I exited here.
Now, after exiting, the market is going down. It's going down. It's moving like this and then going down. During this entire time frame, my money was in debt at 50%, and in this frame, this debt money gradually went back into equity. So my average will come down even more. It means that at this point, I was always buying at falling prices. So 50% of my money got invested here, which I booked right here. So here, I booked a profit. Plus, what I did was averaging again at the lower price, which is called rupee cost averaging. I am doing rupee cost averaging, and when the market gives a return from here, my return becomes exceptional compared to the rest of the public. This system that I am explaining to you so easily, brother, took me 5 years to develop. Today, this system runs automatically. I don't use my mind in it. I follow what the system says, and I am booking very good profits with this system. Returns are also being generated. I just want to tell you with this system that if you book profits, it will be great. If you don't want to and want to leave it as it is, that's also great. Both concepts are good. There's nothing bad about it. But today you learned something new that you can book the profits, I hope. This video is helpful. Let's move to the screen.
So friends, what will happen with this strategy is that whenever you see the green super trend, you will capture a very big momentum. But keep one thing in mind, it is important here. Like you are seeing a 32% jump here. At least I need a 20% upside move on the super trend. Only then will I take out 50% of my profit. For example, look here, the super trend was green, but the return is actually negative. So, we will not take out our quantity here. Whenever we see a move greater than 20%, like here, there is a 57% move. Now taking out 50% quantity is a sensible decision. Why? Because when you exited here, look, it's almost for 48 days. It means it took more than a year. Trading around that level in the market. If your money remains in debt during this time and you gradually withdraw from debt to keep investing, it will be very good. Before this, see here, if this market gave you a return here, at this point, it gave you a return of almost 18%. You did not exit. You did not exit during this entire duration. So you can say yes, even during COVID, your situation